So you're thinking about moving to Fayetteville, North Carolina? Well, in this video, we will be discussing the mortgage predictions of 2024. So if you've been curious about the rates and what's going on even for the rest of the year and moving over to 2024, you want to stick around to the end of the video so you don't miss any of the important information that we want to share with you about this topic. And we're going to get at it right now. My name is Michelle Capers, and I'm the broker in charge of Moving Forward Real Estate. And believe it or not, we get calls and texts and emails from clients just like you on a daily basis looking to move to this great city. Now, whether you're a seller or a buyer or even an investor looking to move in 90 days or 9 months, give us a call, shoot us a text, or send us an email, and all of our information will be in the description box below. We want to help you make a smooth move to the great city of Fayetteville, North Carolina, Cumberland County, and the surrounding areas. Now let's get into this video. Interest rates have increased over the last 6 weeks, and this is the highest they have been since December 2000. The average 30-year fixed rate mortgage rose from 7.5% on October the 12th to 7.63% on October the 19th of this year, and this is according to Freddie Mac. In this environment, it is important that borrowers shop around with multiple lenders to ensure that you get the best interest rates. Research has shown that down payments are the single largest barrier for first-time home buyers attaining home ownership. The borrower should ask the lenders also about down payment assistance programs, and if you give us a call, we can explain that to you as well. And I explain down payment assistance in my video, Buying a Home, Essential Tips to Consider. With inflation gradually cooling, the size of the Fed's rate hikes are coming down. Additionally, the likelihood of a recession has many experts believing that the mortgage interest rates will move into a tighter range compared to the spikes we saw early in 2022. Of course, the rates could rise at any given week or if another global event causes a widespread uncertainty to the economy. Now, this information comes from Freddie Mac. Many experts and industry authorities believe that there will follow a downfall trajectory in 2024. Whatever happens, the interest rates are still below historical averages. Dating back to April 1971, the fixed 30-year interest rate average was about 7.8% according to Freddie Mac. So if you haven't locked a rate in yet, don't lose too much sleep over it. You can still get a good deal, historically speaking, especially if you are a borrower with strong credit. Just make sure that you shop around for the best lenders and the lowest rates that you possibly can get for your unique situation. Now, which mortgage is the best loan to get? The best mortgage for you, of course, it will depend on your financial situation and your goals. For instance, if you have to buy a high-priced home and you have great credit, a jumbo loan is probably best for you. Jumbo mortgages allow loan amounts above conforming loan limits, which maxes out at about $726,000 in most parts of the United States. Now, on the other hand, if you're a veteran or a service member, of course, a VA loan is almost always the best choice. VA loans are backed by the U.S. Department of Veterans Affairs. They provide ultra-low rates and they never charge private mortgage insurance, which is the PMI, but you need an eligible service history to qualify. Conforming loans and FHA loans, those backed by the Federal Housing Administration, are great low down payment options. Finally, consider USDA loan if you want to buy a home or refinance real estate in a rural area. Now, USDA loans have below market rates similar to VA and reduce mortgage rates insurance costs. The catch is that you need to be purchasing in a rural area and have moderate or low income to be USDA eligible. So if this is your first time to our channel, you want to go ahead and like and subscribe and hit that notification bell so you can be the first to receive all of the information about the current market of the great city of Fayetteville, North Carolina, Cumberland County, and its surrounding areas. Mortgage rates displayed their famous volatility in 2023. Uncertainty in the banking sector led to downtrend, but ongoing inflation battle, Fed hikes, and hot job markets drove growth. At its July meeting, the Fed made a small hike in its continued fight against inflation. Then in September, the central bank held off on a rate hike, preferring to see if the economy will keep cooling organically. Going forward, the FOMC said it would adjust its policies as necessary, which could mean additional hikes or possibly none at all. Here's a few strategies to keep in mind if you're mortgage shopping in the next few months. Indecision can lead to the failure or missed opportunities. That holds true in home buying as well. Although the housing market is becoming more balanced than the recent past, it still favors sellers. Prospective buyers should take the lessons learned from the last few years and apply them now, even though the conditions are less extreme. Now, taking too long to decide to make an offer on a home can lead to you paying more on that home at best, and at worst losing the home entirely. Buyers, you should get pre-approved first, not pre-qualified for a mortgage. Now, this is so that the sellers have some certainty about the deal close. Now, and be ready to close quickly. A long escrow period will put you at a disadvantage. Buyer demands is lower than a typical year, but the market usually heats up in the spring and summertime. Shopping around is not only for the holidays. Since the interest rates can vary drastically from day to day and from lender to lender, failing to shop around likely leads to money loss, and we don't want that. Lenders charge different rates for different levels of your credit score. While there are ways to negotiate a lower mortgage rate, the easiest way is to get multiple quotes from multiple lenders and leverage them against each from the other. For potential home buyers, it is important to get quotes from multiple lenders for a mortgage, especially during such a volatile period. As the mortgage market slows due to the lessened demand, lenders will be more eager for business. Now, while missing out on the rock bottom rates of 2020 and 2021, which they were sitting, there's always a way to use the market to your advantage. Now, this is how you can shop for interest rates. Rate shopping does not just mean looking at the lowest interest rates advertised only because they aren't available to everyone. Typically, those are offered to borrowers with great credit who can put a down payment down of 20% or more. So that might not be your case. The rate lenders actually offers depend on your credit score and your credit history, your personal finances, your down payment, your home equity if you're refinancing, your loan to value ratio, your debt to income ratio. Now, to figure out what rate a lender can offer you is based on those factors. Now, you have to fill out a loan application, of course, and then the lenders will check your credit, verify your income and debt to income ratio, and then they will give you a real rate quote based on your financial situation. Now, you should get 3 to 5 of these quotes at minimum to compare to find out what is the best offer for you. Look for the lowest interest rate, but also pay attention to your annual percentage rate, your APR, your estimated closing costs, and discount points. Also, extra fees charged upfront to lower your rate. This may sound like a lot of work, but I am here to help you through this process. You can shop for mortgage rates in under a day if you put your mind to it. Really, it's not that hard. It might sound like a lot, but it's not. The wait for lower rates may soon be over. The not so good news is the rates probably won't go back to the historical rates that we've seen before in 2020 and 2021. And once the rates fall, homeowners will likely have another challenge to contend with, including increased competition and rising home prices. Now, will the mortgage rates go down in 2024? Right now, it's looking like they will, but there are some things homeowners and buyers should know. Other consumer rates, mortgage rates are impacted in large part by what's going on in the economy. Now, rates climbed in 2022 in response to the rise in inflation. To try to quell rising prices, the Federal Reserve started hiking the federal funds rate, which has also kept mortgage rates elevated. But inflation has slowed since its peak in June 2022 when the prices had risen 9.1% year over year, according to the Bureau of Labor Statistics. In September of 2023, the Consumer Prices Index was about 3.7%, and it is expected to slow down even more in the next coming months. The Fed's goal is to get inflation down to the annual rate of 2%, and it's signaled that it's planned to keep rates elevated for a while longer. Recent comments from the Fed's officials have suggested that the central bank could be done hiking rates. So they could be at a point that they're finished hiking rates, which this could help us avoid future mortgage rate spikes. But we're likely going to need to wait a while before the Fed considers cutting rates, which means mortgage rates are likely to remain elevated until 2024. Bond market behavior suggests that the rates are likely to remain elevated through the rest of the year, despite the last several inflation reports showing signs of cooling. Services segments of inflation is proving to be pretty sticky, and the wages components of the labor market remain solid. Now, as inflation gets closer to the Fed's target, we could start to see some of the rates trend to go down. Now, will the rates ever go down to 3%? It's possible that the rates will one day go back to 3%, though if current trends hold and they stay the same, this is not likely to happen anytime soon. Think about the reasons why rates went so low in the first place. In response to the COVID-19 pandemic, the Fed cut the federal funds rate near to zero and purchased a large number of mortgage-backed securities to stave off an economic crisis. This allowed mortgage rates to drop as low as they did, reaching an all-time low of 2.65% in January of 2021. Now, this is also according to Freddie Mac. Now, no one can predict exactly when another economy-altering event like the pandemic will occur. Some may think that we won't see 3% mortgage rates forever. Now, you may be wondering, should I wait for mortgage rates to drop before buying a house? With mortgage rates at the highest level that they have been in over 20 years, some hopeful buyers have decided to wait for lower rates to start shopping for a home. There are some advantages to buying a home right now. At the moment, the vast majority of borrowers have rates that are such lower than current rates. According to a Redfin analysis of Federal Housing Finance Agency data, over 90% of home buyers have a mortgage rate below 6%. Many have rates that are even lower than that. 62% have a rate that is below 4%. Higher rates have kept many of these home buyers from selling since they don't want to give up their current rate. While this has severely limited inventory, the lack of additional buyers on the market has also kept prices moderate. While buyers may have a lower rate in 2024, there will be more competition next year, which will drive prices to be higher. Now, this is the problem of waiting. Buyers, you should grab a deal now at a lower price and then refinance within a year once the interest rates fall. Many experts have agreed that buying now and refinancing later is a good strategy for buyers who want to avoid the competition of a higher home price, and that will likely come with it. Would-be buyers that have the ability to buy and can afford a potential competitive market by locking in a purchase now and taking advantage of a refinance in the future. If you can afford to buy a house now, you can avoid a tough housing market next year and have the opportunity to lower the housing costs with a refinance once the rates fall. Again, just keep that in mind because you don't want to hesitate to wait. Just be sure to shop around and get the best quote that you can from multiple mortgage refinance lenders to be sure you're getting the best rate. So that's all you have to do at this point in this game, this season, of purchasing a home. Just shop around, get the best rates that you can. Don't shy away from purchasing a home now, although the rates are a little bit higher than what they have been, in recent years. Go ahead and lock yourself in. Strategize, get the home that you want, and then let's refinance within a year so you can have that home of your dream and then have, without the competition. And then next year you can go ahead and refinance instead of waiting where that home that you really want, 10 other people want that same home. It's going to be more competition and more likely that you will not get the home of your dream. Well, I hope you learned something from this video today. If you did, leave some comments for us in the description box below. We want to also know, what is it that you want to know about this market? What more do you want to know about Fayetteville, North Carolina? We want to answer all your questions to make a smooth move for you and your family as you transition to this wonderful area. Now, as always, we are moving forward one home at a time, and I will see you in the next video.